Hello everyone. Today we're talking about stocks to invest in before the 2026 rally. Here's the truth. Most investors miss on basics of stock investing. You don't need to guess which stock will spike to grow wealth. You need to position yourself with companies with strong fundamentals and clear growth potential. Always invest with companies that have moats. Today, we're discussing 11 stocks to watch closely before the 2026 rally. Spotify, Meta, Goldman Sachs, Blackstone, Carvana, Reddit, Palantir Technology, Eli Lilly, Robinhood, Tesla, and of course, NVDA. Whether you're just starting or building a portfolio, by the end of this video, you'll know why these companies matter, what catalysts to watch, and how to structure your portfolio strategically. We're focusing on quality over hype. Now let's take a quick look. First company we're going to talk about, Spotify, ticker symbol SPOT. Spotify has streaming and podcasting growth and continues globally with reoccurring subscriptions and ad revenue expanding. Also, let's take a quick look at Meta. A good reason why we should invest in Meta is Meta Platforms continues to have advertising dominance. AI and metaverse initiatives give multiple long-term growth. Third, Goldman Sachs. Their investment banking and wealth management opportunities benefit from active markets and rate cuts. Fourth, Blackstone. It's a diversified asset manager positioned to profit from private equity and real estate, as well as the credit markets. Next, we've got Carvana. Its online auto marketplace benefits when financing costs fall, boosting sales. Next, we've got Reddit. Its advertising and subscription revenue growth and expanding platform adoption. Next, we have Palantir, ticker symbol PLTR. Its enterprise and government data analytics contracts provide recurring revenue with high visibility. Next, we have Eli Lilly, ticker symbol LLY. Strong pharma pipeline with consistent revenue from existing drugs. And we also have Robinhood, ticker symbol HOOD. Its retail trading platform benefits when rates fall and trading activity will increase. Next, we have Tesla, ticker symbol TSLA. It's an EV leader with global expansion, battery innovation, and AI integration. Last, we've got NVIDIA, ticker symbol NVDA. Its AI and gaming chips dominate the market, powering growth in data centers and AI applications. They all have catalysts and continue to drive the market higher. These were the big winners in the past year, and because of their strong moats, they should continue to climb in price. Let's take a quick look at portfolio positioning. Here's a recommended allocation for these 11 stocks. If you really want to start investing, really your core positions should be NVIDIA, Tesla, Meta, and Goldman Sachs. At Josh Closure Investments, we prefer stocks with moats that are large cap, that continue to produce quality products and have an edge over other companies. Second, if you want to look at growth, you can take a quick look at Spotify, Palantir, Reddit, and Carvana. All can continue to outperform the market. And third, it's very important to have defensive and stable income. If you're wanting some stocks that have dividends, Eli Lilly and Blackstone both pay dividends and continue to increase their dividend. So these stocks right here, those two are both also highly recommended. A few rules to remember when it comes to allocation: always diversify across sectors. Avoid overweighting any single stock. And reassess quarterly based on fundamentals and market conditions. Now let's discuss risk management. Even the best companies in the world still have risk when you're making an investment. So always do your own due diligence and understand what your own personal risk tolerance is. Always remember position sizing. Keep exposure to one stock reasonable. Second, always have a diversification plan across sectors. We also encourage investing in real estate, gold, basically diversifying across, have multiple revenue streams is always very important for long-term growth. We always want to focus on the big picture and have a long-term focus, and avoid reacting to short-term swings. The market's going to continue to be volatile. We have President Trump, which is good for our market, but there's also going to be heavy volatility, and we should try to take advantage of this stock market's volatility. Is actually a good thing. When the stocks dip, great time to invest. Loading up on NVDA and Tesla and Eli Lilly is a great long-term strategy. A few key takeaways today. These stocks today covered tech, AI, financials, EV, pharma, and social media. We want to focus on companies with strong fundamentals, reoccurring revenue, and clear growth catalyst. We look for companies with moats and also great CEOs. If you look, Tesla's got Elon Musk, NVIDIA's got Jensen Huang. So you also, when you invest in a stock, always pay attention to who's running the company. Also, remember to diversify across core growth and defensive positions. Early positioning increases your chance of benefiting from the 2026 rally. The best time to be invested is right now. Dollar cost averaging is a great strategy. Long term, the results speak for themselves. So if you're not invested, take the time, do your homework, and start investing. Also, we make YouTube videos here every week, so be sure to check back in, and we'll continue to update our stock portfolio. Appreciate everyone watching the video, If you have any questions or comments, feel free to leave them in the comments section, and we'll be more than happy to answer. Hope everyone has a very profitable week, and we'll make another video next week. So be sure to come back and join us.